Welcome to Indy's Real Estate Gurus. I'm Rick Ripma, your hardworking mortgage guy, and I've been in real estate and mortgages for over 34 years. I've helped over 5,300 folks finance their homes. My team and I believe in custom tailored loans, not the one-size-fits-all approach. We believe there is a right mortgage for you, and we are the team to deliver it. And today I'm really excited. This is a special show with some people I've known for a long time. Do you know how long we have known each other?
Well, I think the kids were, about 7 years old, Rick?
I think so.
Yeah.
Yeah.
Getting close to be maybe 28 years.
Yeah. I would not say you still look the same as you did back then either. You don't.
I'm glad I could change.
But your dad and I look exactly the same. We haven't changed a bit.
No hair then, no hair now.
That's right. And it's Ron and Jake Rich, and you guys are financial planners, and your company is called?
Capstone Wealth Advisors.
All right, perfect. And if somebody has any financial planning needs, what is the best way to get a hold of you two?
Just give us a call, 317-577-8233. And quite frankly, all of our initial consults are at no cost. We'll be happy to look through your financial information. If we can give you some ideas, great. And if we think it's a good idea to work together, we can make that decision mutually.
Yeah, it's awesome. And, really what we want to do today, for the most part, I think, is really, I've had a lot of real estate agents who have told me they really would like to hear from a financial planner who can help them understand, what's available to them. And as you said, there's so many things and this is, I guess, really any self-employed, but specifically real estate agents. There's so many things that complicate what they do. And so I think that's going to be the very best thing we can do. So I want to start with a question I had from an agent. And it's one of those questions that all of them kind of amaze me because they do such complicated things. But this agent said, I don't even know how to buy a stock. How does somebody go about? And it's probably is more complicated than just going to buy a stock because you got to know what to buy and all that. So Ron, how does somebody go about doing that?
Yeah, there's a couple ways to do it. If you want to buy individual securities, then you go to a company like Schwab. And online with your computer, this is really straightforward stuff. You can register, set up an account, and quite frankly, in a matter of minutes, be prepared to buy a stock or a bond. If you want to buy a diversified portfolio, then maybe you go to somebody like Vanguard. And again, within just a few minutes, you can have an account registration and be investing for as little as $1,500.
But what if you want? Like, I think it makes a lot of sense to have somebody who can actually guide you so you're not, obviously, if you only have enough money to buy a stock, you don't have a lot. And I don't even think you can't. Where I buy, you have to buy 100 stocks at a time. Can you buy less than 100?
You can, but you're going to buy them a lot cheaper if you're buying in equal blocks of 100. There's no question about that.
Okay. So I didn't know. So to get I think people need to go, especially real estate agents. They're in a business where they have to plan for taxes. They have to plan for their retirement. There's so many things they have to do. They need somebody who actually can walk them through that. And is that something you guys do?
Yeah. So as certified financial planners, we're not the two brightest guys in the world, but we do have a lot of experience at what we do. And, knowing how to avoid mistakes is probably as critical as knowing what to do, because it's just far easier. I would rather avoid a problem than to solve a problem, Rick. It takes less time, less money. So we just help people leverage their time and their expertise, and we lend them that. And that's what we do for a living. It's they know what they're doing in their own field. We know what we're doing. And, you're at a disadvantage if you're trying to play the other guy's game.
And how long have you been a financial planner?
I started out my life as a certified public accountant, and in 1993, I became a certified financial planner, and so I've been doing this for the last 30 years.
So you've been doing this for 30 years, plus you were a CPA.
I am a reformed CPA, Rick. I used to do tax work and audit work and things, and then I got smart one day and said, I need to do something that's more fun.
Yeah, well, you're a money guy.
I like helping people.
Yeah, and then Jake, how did you end up getting into business?
Yeah, so I did a couple things after school. I got a little bit of management experience. I got a little bit of sales experience. And at the time, I was kind of working with a commodity product, we'll call it, and I really just wanted to help people. And so I'd been around him my entire life, shockingly.
Really? Your whole life?
Yeah, the whole life I've known this guy. But so I knew what he did, and I told him I didn't want to work for him, so I went and worked for Merrill Lynch and
Okay.
kind of experienced what that was like. And then I got to a point where, again, there's a little bit more of a product background there, so I wanted to give more advice, and so I started working with him in 2020, I guess. It's been 3.5 years.
Well, I can tell you, I don't think there's anything more valuable to a young person, or really to anybody, than to have a great mentor. And you have a great mentor.
You said it, not me.
I know.
No, he's been terrific. He's been fabulous to learn from and experience. And again, obviously a little biased, but I think he does a pretty good job.
Yeah. Well, I've talked to many of your clients, and I can tell you he does a great job. And it matters. We talk to a lot of real estate agents that are successful because of the team they ended up on, because of the mentorship they were able to get. And I'm sure there's mentorship both ways. I'll bet you, this is just because I know how I am, and your dad and I are about the same age, that you mentor him in some things, because there's things that we don't understand. Is that correct?
Oh, some of the technology stuff, I simply don't touch the computer anymore. I let Jacob deal with that, and he does a great job. In his case, he stepped in to an established firm. My business partner is a CPA, a CFP, our other business partner who is our office administrator, just a terribly talented person. So Jacob's had the exposure to working with some really successful, high-quality people, and he's absorbed it all.
Yeah, and that makes it, I think that makes a huge difference. It just, 3.5 years can be like 15, 20 years if you have the right people to work with.
Well, I worked for Merrill Lynch for probably just under 3 years or just over is in that time frame. And I would say I've learned kind of a hockey puck style or hockey stick style growth with what they do at Capstone, what we do at Capstone.
Perfect. Well, let's get into more of the financial planning. So, Ron, how can someone manage their cash flow effectively to optimize their savings and investments?
Yeah, I'm going to start with some pretty basic stuff because I think you need a great foundation. And the first thing is you need to have life and wealth goals. What is it you're trying to do? Where is it you're trying to go? And having a clear understanding of that is the first step. The second thing, and this isn't very sexy, but have a budget. Outline where you need to spend money. What are your commitments so that you know how money needs to be allocated? And third, you got to have some kind of a cash flow monitoring system. Like I said, this is kind of boring stuff, but without that foundation, you're going to make a lot of mistakes. With that foundation, you're going to avoid them.
Yeah, it may sound boring, but long term, it changes your life.
People who have written life and wealth goals have a much higher probability of success than those who don't. People who have a budget spend less frivolously than those who don't. So if you want to be successful, do those two things and you're on the right road.
Yeah, it's not all about what you make. In fact, a lot of it's about what you keep.
Absolutely.
Most of it's about what you keep. And that isn't always the easiest thing to do. So a budget makes sense. So is that one of the things you help people with, is getting a budget put in place so that...
So it's a good question. The budget comes back to the personal level and being very stringent on how you track that. We can help implement that or set it up for you, but the tracking of it, and we have a system that allows you to aggregate a lot of your accounts, so it'll do it automatically. But if you're just using a Excel document, that's a great place to start as well.
Some people are just really inclined to follow that advice and do it. Others, you have to make it simple. A lot of banks now, credit unions, we have one where you just, like Jake mentioned, you go in and you plug in all your accounts, your credit card, your bank statements. It all aggregates and populates in there. It makes it really easy. And you can even use that same kind of a tool and create a budget.
Yeah, I've noticed they have that, and it seems like everybody's got it, and it's really easy to use.
It is.
For something that's really, like you said, boring and really not a lot of fun to set up, usually.
Well, we've joked, if you want to really get heated in a marriage, just talk about a budget. It's a great way to get a divorce.
Yeah, you're right. Yeah. Well, money, isn't that the number one reason people end up in divorces? Probably not money. It's the lack of money.
Well, it's actually the communication about money. There's 50% of all marriages end in divorce. And if you ask overwhelmingly what the problem is, it's communication. Then you ask the next question, communication about what? The answer is overwhelmingly money. If you can talk about money in a marriage, you'll probably solve most of your problems.
Yeah, but isn't it weird how we're kind of taught not to talk about? You were a money person, so I'm sure Jake heard money all the time. totally different than most people who never hear anything about
Well, think
money.
about it, Rick, as you grew up. What class did you ever have that taught you about money?
None.
Not grade school, not high school, not college.
No.
I mean, that's just not a subject that is, and again, I think we fail as a society for not educating people about money. Most people simply don't understand money.
Yeah. And it's important. That's the problem. It's very important. Yeah. I just think it's one of those things that I think is vital to learn. Now, there's again, a tremendous amount of self-employed people who listen to the podcast, and specifically the real estate agents. And they have, these retirement issues. So how do they go about, first of all, they should get a hold of you, right? But what are you going to do for somebody? How are you going to help somebody get set up so that down the road they can retire from their business?
Yeah, Jake, you want to talk about some of the retirement plan options that are available to self-employed people?
Yeah, so you can, in general, just anybody can set up a traditional IRA or a Roth IRA, and Ron had mentioned a couple places earlier that can help you with that, even your bank. But beyond that, as a self-employed person, you may actually set up a business entity. And through that entity, you may be able to set up a simple IRA or a solo 401k that would go above and beyond those just kind of traditional and Roth IRAs. And it really is customized to that person and what type of entity you set up to decide what is my savings options, what are my limits to that contribution. And with an inconsistent income, you really want to avoid setting up something that has a mandatory contribution, because I mean, month to month, you may not be able to make that mandatory, or even year to year. And so, Ron, why don't you talk about some of the kind of flexibility?
So Jacob mentioned that we think self-employed people, especially people in real estate, you might have a great quarter and then nothing the next quarter. I mean,
Right.
And yet have a great year.
Yes.
So having flexibility, the ability to not make a contribution, that's really key. And some plans have mandatory contributions that can really create some cash flow problems. Later on, when your career is more mature and things, you probably don't need as much flexibility, but that's a caution that we would have. One thing is, if you want to contribute to a plan, you don't necessarily have to do it early in the year. You have all the way till the date you file your return to make that planned contribution, which is an extension. That could be all the way to September 15th of the year following the year. So you can buy yourself some time. But again, I look at people who have inconsistent cash flows. You really need flexibility. And again, what is your income tax bracket? Do you want a tax deduction now, or do you want tax-free income later? Those are really important decisions. That's the kind of thing we help people walk through, because one size does not fit all.
Right.
And the key is what fits you now. Maybe down the road we do a different decision, but let's keep flexibility in mind early on.
And you mentioned the budget earlier. We talked about the budget. If you have that flexibility, maybe you build it into the budget. Maybe some months you make the contribution, other months you don't. But flexibility, and again, starting with that life and wealth goals, building that budget out, even kind of tells you what you can contribute.
Yeah. I have to say, I've been in sales my entire life. I've been a commission on everything I've ever done. And that is one of the hardest things that you had to work through. And part of why I didn't work with anybody forever, because I didn't have a consistent income. I'd have huge income, then I'd have nothing, then I'd have huge. And I couldn't find anything where I could have the flexibility. So I had to end up doing it myself until I found somebody who gave me that flexibility.
I think the real challenge is managing your cash flow. So we've had for many, many years an oral surgeon who has made really good money. You would think someone making $800, $900 million a year wouldn't have cash flow problems. Well, quarterly estimated payments, but think about how they fall. January, April, and June. The bulk of it comes in the first 6 months of the year. So what else is going on during that time? Well, you got to make your profit sharing contribution. And so it was always a challenge to help them manage their cash flow, because they had these big outflows that would occur, and they'd always be weighted in the first 6 months of the year. Second 6 months of the year, they thought they were fat and healthy. You get to that next 6 months again, and it's a challenge to meet the cash flow. It's the same thing for anyone who's self-employed that has an inconsistent income. You just got to think through. You might have money in the bank, but is it yours?
Right.
Or is it the IRS?
Yeah.
Is it yours, or is it that mandatory profit-sharing contribution? And so separating sometimes out these pieces of money into different accounts can really be helpful. It's a simple solution, but it works.
Yeah, and I would say that if it's the IRS's money, you better make sure you keep it for the IRS.
Well, we could ask Hunter Biden about that. He has some experience missing some of those payments.
But I think I really like knowing that you guys do this, because I think that's exactly what a real estate agent needs. They need somebody who understands the inconsistent income so that they can do their financial planning to set up for retirement, but not just for retirement. They got to set up for paying their taxes.
Rick, we think a cash flow monitoring system is absolutely essential for success. Again, is it boring? Yeah. But is it necessary? You bet.
Yeah, I mean, you're a CPA, so I mean, it's got to be more exciting than that. I probably shouldn't say that, should I? You were thinking it, Jake. You were thinking it. I could see it in your eyes. So what? How does someone balance their short-term and long-term financial situation?
Yeah, I think it really comes down to setting up, you putting it down on paper and understanding what the trade-off is. How do I achieve? Because a lot of people, retirement, that's a really long time away for someone like myself. So when I think about retirement, well, there are things I want to do along the way. So how do I set myself up with those goals and still not impact that? So it's this big balance, and using separate accounts to fund those things. And it doesn't have to be anything fancy, just be a separate savings account, separate money market account. Short-term goal, quarterly estimated taxes. Long-term goal, funding my retirement for the year. I mean, that's only a year, but it's still a different opinion. And so you really need to have those different buckets set up, especially with inconsistent cash flow.
And first things first is a good expression to remember. When you start out and you've got some cash flow, there's a tendency, especially for younger people, and I'm not being critical here, to want to jump into investing in equities. Build your emergency cash fund first. That pool of money that when you have that slow month, you can rely on. That pool of money, if you got to take a vacation or if you got to buy a new car, it doesn't impact the other things you're doing. And so I think the real key is when you're early on, have that account where you build up your cash reserves. I think 6 to 9 months of living expenses and a cash reserve account is absolutely essential. It's kind of like the oil in your engine. You don't think about the oil very much. You might have a really neat car. I notice you got all kind of car-related things in here, Breck. But no engine's going to perform well without oil.
No, they don't.
And no financial plan works well without cash. It is the lubricant that makes everything else work really smoothly.
And I think something that might fit well with your real estate audience is you got to save up for down payment of your home, right?
Right.
So you set that money aside. That's kind of the same idea. You have to have that cash to be able to do what you're trying to accomplish long term.
Yeah, I find it very interesting. I interviewed a guy, and I don't remember what his name, but he wrote a book called The 3 Cups or something like that, and it was for kids, and he was teaching parents and the kids how to save when you're young, and you had money and you put it in the 3 cups, and you're talking about exactly the same thing, which is such a great thing to teach your kids, because then they can carry it on through their entire life. I mean, it's phenomenal.
We talked about this earlier. When this guy and his siblings were really young, I put them on what's called the envelope system. And I gave them an amount of money at the start of every month, not because they did chores. The chores were because you lived in the house.
Right.
You didn't get paid for that. I didn't get paid for doing dishes or mowing the grass, and neither did they. But we'd give them some money, and we'd divide it up into 3 envelopes, one a giving envelope, one a long-term savings envelope, and one a spending. And then we gave them the flexibility to use the money. And the idea was let them make mistakes, let them learn from the mistakes. The day I knew this stuff was working, had his older brother at Kohl's, and we're looking at a pair of tennis shoes. And his brother, this is back in the day, he brings me a pair of tennis shoes. They're $60, a lot of money.
Yeah.
And I said, well, that's great. I said, Dad's prepared to spend $30. So if you want to use your money and make up the difference, you can have these shoes. He looks at me for a minute and turns and walks away. 5 minutes later, he comes back. He says, Dad, I really like these. $29.95, Rick.
Yeah,
that's when I knew this stuff was working.
Yeah.
But again, it's a really simple system, but separate accounts is just a continuation of something that's simple that works.
Yes. It's funny how kids are. My kids did the same thing. When it was their money, I don't need that so much. When it's not their money, I want this one. Yes,
choices have consequences, Rick.
Yes, they do. So if somebody is interested, they want to talk with you guys about financial planning, Jake, how do they get a hold of you? What's the best way?
Yeah, easiest way is just give us a phone call, 317-577-8233. Teresa will probably answer the phone, and she'll be able to book an appointment that way. And again, that first consultation is completely free. Yeah. And we'll just kind of review kind of where you're at and talking kind of generalities and if we may be able to provide some value.
Yeah. And Teresa's great, just as a side note.
And, Rick, when someone comes in the first time, we ask them to bring tax returns. We ask them to bring investment statements, ask them to bring a copy of their will and estate plan. If they have other things they've got questions about, bring it in. We're going to review all that. And again, we'll go through it, and we won't make any recommendations to someone who's not a client, but we will let them know where we think there's areas that they need to have some help. And so we'll give them a laundry list, what we call a financial action checklist. And it's like, if you're our client, these are the things we're going to go through.
Okay. So you actually, the first step is just to meet with you, no obligation, bring this stuff, you can go through it and then help them kind of get an idea what should be done.
Yeah, it's kind of like a doctor. If you go to a doctor, you fill out kind of a questionnaire and give a little bit of your medical history. That's really so the doctor can be up to speed and speak to you specifically. That's why we ask for those documents. Otherwise, we're just kind of guessing. We don't know your financial situation. Right. And so we like to get the document. That way we can talk to you on a real personal level. We prepare that financial action checklist, and we can have a conversation about what may fit and may not.
And Rick, you probably appreciate this. It's really uncomfortable for some people to share their financial information.
Absolutely.
So first thing is anything we talk about with clients, strictly confidential. We have a fiduciary obligation to protect their privacy. But again, we need to have that information so we understand where you are. And not only that, but this process allows that potential client to get to know us a little bit. They need to develop some confidence that we actually know what we're talking about and that they're comfortable working with us. And if you can't establish those two things, you need to move on and find somebody you have comfort with and you think they're up to speed enough to help you.
Because this is a long-term relationship.
That's what we hope. We hope to be the last financial advisor someone ever hires. That's our goal.
Yeah. Well, but it should be. It should be a long-term. And I think real estate agents understand that because their process is a fairly long process for most people. That you buy a house, it takes 30 days to close, but it takes, got to sell it, all these other homes, and there's just a lot of time. Your process makes that one look like a day because you really need time is what it takes to build the wealth that most people are hoping to build. And so they have to spend a lot of time with you, and they have to have faith and trust.
I agree.
And I think, obviously, I think you guys, people should see that, and it's pretty obvious. So what about tax strategies? And because real estate agents and self-employed people just have so much in the tax and tax liabilities. And so how do they plan that and then maximize their after-tax income?
Yeah, that's a great question. Sometimes, we walk self-employed people through questions like, should you have a legal entity, an S corporation or a limited liability corporation? Should you just be a Schedule C self-employed? And there's sections of the code, for example, Code Section 199A, everybody refers to qualified business income, QBI. Properly structured, someone might be able to exclude 20% of their income from taxation right off the top.
Wow.
This is a really important thing to know about if you're self-employed. There are some limitations to that. But again, you want to make sure that if you're potentially going to be qualified, you get it. Second of all, then comes into, we're back to retirement plans. Those contributions can be pre-tax, but Rick, here's the question. Is a pre-tax contribution better than an after-tax or so-called Roth contribution? That's why we ask for the tax return. We don't want an estimate. We want to know what somebody's incremental tax rate is today and also have some idea of what it's going to be in the future. Many people might be better off foregoing that tax deduction. So what I'm trying to say is don't let the tax tail wag the dog. Taxes are very important, but what's really important is not just taxes today, taxes over time.
Right.
Because if you don't pay it in tax, and all the law requires you to do is pay the legal minimum. Get to the legal minimum. That's just smart. Now, avoiding taxes is a crime, but getting down to the legal minimum is just smart business, and that's what we try to help people do. If you don't pay it tax, you can keep it.
Yeah, and I think it's important for people to know, at least in my mind, I have a personal trainer, and while I'm working out, sometimes I look kind of stupid. Here I am, 6'4", big guy, and I got I got like 2.5. Okay, he even started me today on just the bar. All right, just the bar. And there's all these people around. But he keeps telling me there's no judgment here, right? You got to start where you are, and everybody's in a different place. And I think the financial is the same way. Some people may be, I don't want to show them what I got. I don't want to show them because they haven't done well. I haven't done a great job at it. So they may be a little leery of that. Do you find that? And they shouldn't be, but I'm sure it's the case.
I'll go back to our oral surgeon clients who we worked with for a number of years. And quite frankly, the gentleman just retired in May. They started out heavily in debt, second marriage situation, support obligations. I mean, you name it, they had a challenge. Zero savings. They just retired with over $3 million. That took time to do that.
Yes.
But they stayed with it over a long period of time. It's like training. You don't go from the beginning of the week till Friday and you're fit. It takes months. It takes years to make those changes. And just good financial habits will get you there. Jacob, on this tax question, can you talk a little bit about a self-employed person getting down to the end of the year might need a new car or planning to buy one in the next year? What's the advantage here?
Yeah, so if you have a legal entity, you can expense things, deductions. And so from a tax perspective, if you get to the end of the year, you need a new car, you use that car for business and for personal. But what if you buy it the last week of the year and you only use it for business? Well, there's a potential that you can write off that entire car as a business expense in that tax year.
And you only owned it for a week.
So again, maybe you had a really good year, you got a big tax bill, you're looking for something to do to minimize that. Maybe you buy some equipment, maybe you buy a new car. And so there's a lot of options there. When you're a business owner, we use the phrase, pigs get fat, hogs get slaughtered.
Yeah.
So you got to be a little cautious of it, but it's okay to look at some of these expenses and these deductions and say, what can I legally do? And then kind of work from there.
And Rick, we're not saying go buy things you don't need, but let's say you were going to buy that car in June of the following year and you just had a really big year. Under Code Section 179, again, consult with your CPA. We're not giving tax advice here. But it's possible that you could expense that entire car
Some people.
At the end of the year and save yourself a boatload of money, or at least defer that income.
I mean, how much paper is involved in getting a mortgage? Maybe you need a new printer.
Right.
I mean, there's a lot of options.
There's no paper anymore.
Ink.
Sure. Sure. Yeah, we'll go
Stock up on ink. That stuff's worth more than gold.
Now at the end of the year, I think it was last year, I had stocks that had dropped. So I sold them at the end of the year, and then I bought them back again at the beginning of the year. And somebody told me to do that. Is that a wise thing to do, Jake?
So it really depends. You got to execute it correctly. So inside certain accounts, so an after-tax investment account, you can do what's called loss harvesting. And so you can offset ordinary income up to $3,000 in that year, and then you can carry forward anything beyond that. So let's say you harvested $10,000 of losses. You can use $3,000 next year and the year after that until that $10,000 is gone. And to your point, you had to wait a specific amount of time, so 31 days,
right,
to repurchase a similar stock. But use the example, let's say you sold Coke and you bought Pepsi. That's okay. You don't have to necessarily wait those 31 days. But if you sell Coke and you want to buy Coca-Cola again, you got to wait that period.
And this gets really complicated because let's say you sold it in your personal taxable account, you harvested the loss, but you turned right around in your IRA and you bought Coke. You just voided the deductibility of that loss because that's part of the wash sale rules. You can't let your spouse buy it. You can't go buy it. You got to stay out of that stock for 31 days. But like Jake said, buy a stock index, buy a similar stock in a similar industry, and you might still have exposure to that.
And the other piece is if it pays a dividend, you got to be careful when that dividend hits because that can void it as well. And so every quarter, if you're close enough, you might want to wait.
Yeah. Well, it sounds to me like what you're saying is when you do something like that, you should talk to somebody who knows what they're talking about, huh?
I think that's good advice for you.
So if somebody wants to talk to somebody.
Just like when I want a mortgage, I pick up the phone, I call you. I don't assume I know what I'm doing.
Who knows what they're talking about? How do they get a hold of you? What's the best way to get a hold of you, Jake?
Yeah, so you should give us a call, 317-577-8233.
Jake, what's your email?
Yeah, and if you want to email me, my email is jrich, so JRICH, at Capstone, WACAPSTONE, STONEWA.com.
Okay, perfect. And that's Jake's the best one to get a hold of because Jake is more available than Ron.
Well,
correct?
We'll just say I'm more responsive. I think that's the nice way to say it.
I'm out of the office on a regular basis.
Yeah, well,
I have some open air obligations.
yeah, I understand that. I understand that. You do. I heard you. I heard you have a lot. So
Interesting way to describe golf.
Yeah.
Open air.
hey, that's what he enjoys. Listen,
He's earned it.
if he played like I play, well, I don't play anymore, but if he did, he would not enjoy it. It would be torture for him, okay? But he must be good at it.
He's
So
getting better.
give
He's
him a
getting
break.
better.
So how do I invest and try to build my wealth by minimizing my risk, not maximizing my risk, minimizing my risk?
Yeah. Ron, why don't you go ahead and
Yeah,
and
yeah.
take this?
The first thing is have a diversified portfolio of investments. Last year was an exception, but typically when stocks go down, bonds do fine, vice versa. Last year, stocks and bonds went down. The bonds primarily as a result of the Federal Reserve's hiking interest rates. But you don't want to put all your eggs, Rick, in one basket. And all you have to do is think about companies like Enron. I mean, these are horror stories. But take GE, which for years was a member of the Dow. GE went through a period of time where they lost a lot of value, and that was a blue chip, stable company. We have clients that have concentrated portfolios and things, and there's just an element of risk with no real upside on that risk. And so if we're not getting paid for risk, we like to see our clients mitigate the risk. So I think the main thing is just start with a diversified basket of securities, good quality mutual funds, ETFs. That's the easiest way to accomplish that. And then over time, just continue to invest incrementally over a long period of time. We call it getting rich slow. It works. All you have to, you don't think about it, but $250 a month, $1,000 a month, build up to it and just continue to do the same thing over and over again over an extended period of time. You're probably going to be doing just quite well.
And one thing to say about that too is if you can automate some of those things. I mean, think of Netflix. They built a business off this. You sign up one time and they just bill you every month. And how many people forget about it? Or they just keep paying, it's only X number of dollars.
Right.
So if you can set aside and kind of systematically do it, whether it's from a paycheck, a lot of real estate agents accruing it into a different account, where you don't see it, you don't think about it, it'll really help because you'll start to live off what you see.
Yeah.
And Rick, with real estate agents, I think playing to your strength. So what would be a natural for a real estate agent? Buy a piece of real estate.
Right.
And manage that. They're already in the business. They know the market. It's tough to win when you play somebody else's game. It's easy to win when you're playing your own game. And so I think for real estate agents, that's a natural thing to look at. Always play to your strength. Stay away from your weaknesses.
Yeah.
You got to make sure you know your risk as well. Because someone like myself, who's got a long time till I retire, has a different risk tolerance than somebody else that may be close to retire or having just retired. So how you structure and grow that wealth, it really matters on time too.
They should have a different risk
tolerance. Hopefully if they've done things correctly, they've got a different risk tolerance.
They don't always. It's funny too, because when I was first starting out, I was in car sales and I just put, I think it was $200 a week. And it may have been, I was shocked at how fast it grew.
Listen, people who understand compound interest earn it, and those that don't pay it.
Yeah, it was amazing. It was like I turned around, it was like I got $5,000. And I remember going, wow. That was amazing to me. So it really does matter. Now, do you guys do anything with insurance, or can you talk about insurance and how it plays into a financial plan?
Yeah, we're a fee-only investment advisory firm, so we do not sell products. We do not earn any commissions. The only money we ever get paid is directly from our client to us. So we're fiduciaries in that sense. But yeah, we deal with a lot of insurance issues, Rick, because risk management is foundational to having a financial plan. Like I said, having a cash reserve, that's foundational. That's the base. If you don't get the base right, nothing else is going to work in that pyramid. So for example, if you're a self-employed person like a realtor, you need to have a good quality disability income policy. You may be really healthy today, and it may be very different tomorrow. And so having that long-term disability insurance is, I think, critical. Having liability insurance, umbrella liability. We live in a litigious society. And, you might say, well, I've got, $500,000 of liability insurance as part of my auto and homeowners policy. Getting a lawsuit, it isn't going to go very far. Somebody who has that kind of exposure, they need $3 million of personal umbrella liability. You need long-term disability, and you need cash reserves. That's a good start on an insurance program.
Okay.
And depending on if you're self-employed or you have your own entity set up, you may be able to also get company long-term disability policy, which is a little bit different than the individual, but they both have very good, very important pieces to your
and
insurance
along
policies.
to piggyback on what Jake just said, having a legal entity like an S corp or a LLC, your assets, personal assets, are protected if it's work related. They might sue and take the things out of the business, but they're not going to come after your home. And so having that entity to protect some of your assets is also really key.
Yeah, and it matters. I read somewhere where when you're young, you're much more likely to be disabled than to die.
Absolutely.
So it's really important.
Now-
And a lot of people think about life insurance, but they don't think about that. And you're 100% spot on. The probability of you having a long-term disability or even a short-term challenge is far more likely than accidental death at this point.
The problem with a long-term disability is you're still a consumer. At least if you've passed, you're no longer a consumer. So from a family perspective, you've got a big problem if you become disabled and you're the primary breadwinner.
And I was reading, since 2021, 5 million people over what they had expected became disabled. And like 2.5 million, 3 million of them were working people. I mean, that just, so it's kind of a pandemic in a sort on that, where there's a lot of people having problems. So what, and to that, so if there is an unexpected injury or disability, how does that impact the income?
So from an inconsistent cash flow perspective, especially, having that cash reserve or that emergency fund set aside is kind of the first place to go if you don't have a long-term disability policy. So that's obviously kind of check number one, but check number two is having those emergency reserves in case something happens. Because I think there's a statistic, and you can kind of pick and choose which one, but there's a majority of Americans who can't pay for a $500 unexpected bill per month.
Really?
Just
Yeah, I think I did see that.
$500.
Yes.
And you kind of think about that and you're like, man, that's not a lot of money. But if you don't have something set up or you aren't thinking ahead about it, that can be really a game changer. We're not even talking about an unexpected, I can't work anymore.
Right.
We're just talking about just a car payment.
Yeah. I can't fix my air conditioning.
Yeah.
And it's 100 degrees outside.
Absolutely.
Yeah, that. Now, they should have both short-term and long-term disability plans.
Yeah, again, you can cover, self-insure that short-term disability, which those policies typically don't go out beyond 6 months.
Okay.
So in our world, we'd really prefer someone having that cash reserve,
Okay.
as opposed to transferring that risk. But then make sure you solve the big problem. The small problem is a short-term disability. You go back to work in 3 months. The big problem is you haven't gone back to work in 5 years.
Oh, yes.
And some of those policies, they'll write them that it's not even you went back to work in your industry. It's if you went back to work, period. And so having that supplemental income really does help.
And if back to having an entity as opposed to being a sole proprietor, it is possible to have group insurance inside that entity. Then you can structure whether you want your premiums to be tax deductible or not. If they're not tax deductible, your benefits are probably income tax free. If it is tax deductible, then your benefits are taxable. So it gives you a lot of choices in terms of how you structure things.
Yeah. So as always, you have to structure it correctly. You have to figure out what's best and work with somebody who knows how to do that. Right? That seems like it. So what about, and I know you've talked about it a little bit, Ron, a trust or other estate planning strategies to protect assets?
Yeah, so when it comes down to will and estate planning, a very important and often overlooked aspect. We have some people, really bright, educated, talented, wealthy people who walk in our office and they do not have a will and estate plan. That's, again, one of those foundational basic things. So I'm going to have Jacob talk a little bit about beneficiary designations and title in a minute. But basically, a will or a revocable living trust are simply dispositive devices. And all they do is transfer property that didn't pass by title or beneficiary. A revocable living trust is kind of a more modern version of a will. The one reason I encourage people to look at it is that a will is a public process. Rick, when you die or I die, and if we die with a will, that will is going to be published in probate court and becomes a public document. If you don't believe me, Google Jacqueline Kennedy Onassis will. You can read it.
Oh,
It's a
really?
public document. A revocable living trust is a private transfer of property. It is never published. No one ever knows where the assets went or how much was there. I like privacy. I like privacy for my clients, and I think it's worth the extra couple of bucks to get there. So, Jacob, how does most property pass? Because it doesn't happen with a will or trust.
Yeah, so going back to the should I set up a will or trust? Let's say you have a retirement account, traditional IRA, 401k. You could name me as the beneficiary in that trust, and I'll never see a penny because it passes by beneficiary designation. So when you set that up, if you're married, you likely set up your spouse as the primary beneficiary, goes directly to the spouse. Doesn't ever go to the will or the trust. Your home, great example. If you're married, you own it in joint tenants, joint rights survivorship. First person passes, goes to the second one. It's at the second death that if you name it in the title or you title it as in the name of the revocable living trust, it goes to that and then gets disposited.
Again, private
through
transfer
the
once
private.
it gets into that trust.
So it really, you got to look at the whole picture. Yes, you definitely need to have a will and estate plan set up. Maybe you need a revocable living trust, but make sure they all communicate with your title or beneficiary designations. Bank accounts, same idea.
It all needs to be coordinated. And again, in addition to just the transfer of property, Rick, part of that will and estate plan package, we call it a suite of documents, is your healthcare directives. You need to name someone who's going to represent you if you can't speak to yourself of your own medical needs. You need to name someone as your medical power of attorney. And you need to have, quite frankly, a living will. You know, what happens if you're found in a persistent vegetative state? Tough thing to happen, but it happens to an awful lot of people, and you need to designate what procedures, if any, you want someone to perform at that point in time.
Yeah, you got a plan.
You need to meet with a competent estate planning attorney. Our role there is to help clients understand their options and get organized, because I hope there's no attorneys listening, but attorneys are parking meters. And I don't mean that in a negative sense, but the longer you set, the bigger the bill. And so it's important to be really organized and efficient and have a plan. And we work with a number of estate planning attorneys that, they know that we're going to get these people organized, their time is going to be economized, and that bill is going to be a lot less.
Yeah. You're just like a real estate agent. You know, if I need some work done on my house, they're going to have people who can do that, because they have to have those people to help their clients out. You're the same way. You're set up, and you're going to help them all the way along, because I think the way you've set it up is the best way, where I pay you a fee. That means that you're there for me, right? You don't get paid on anything you sell me you're just there for me. So I pay you, you give me good advice. I think that is I think that's the best way to go about doing.
We're required by law to tell our clients what's in their best interest. We cannot serve our own best interest or anybody else. We have one master and one alone.
Yeah. And on that, well, this is a little bit changed, but it's kind of near and dear to my heart, because we deal a lot in debt with people. So how does somebody deal with their debt, and like, what's the best way to avoid financial problems with debt?
Well, if we go back to the start of the conversation, that budget and really setting up that cash flow monitoring system, that's really the benefit and the starting point, because there's two types of people. There's people who understand compound interest and earn it. There's people who pay compound interest. So if you're spending on a credit card and you don't have the ability to pay that off every month, you got to raise the question, should I be buying it? Now, your audience is primarily real estate, so there's a lot of debt that comes with buying a home or a rental property. That's a little bit different. You're buying an asset that should appreciate in value in theory.
Or at least create cash flow.
Or at least create a rental income, so that's a little bit different. You still want to manage and not get too leveraged, but really the consumer debt is what you really want to be concerned about as you work through kind of some of these choices.
Especially, Rick, if what you're acquiring is something that's depreciating in value. We don't need every shiny object that we're attracted to. And far too often we see people use high interest credit cards to acquire these things. They don't pay them off. We've been doing quarterly meetings, and one of the consumer statistics we're very concerned about right now is the rise in credit card debt.
Yes.
And
huge.
not only is it going up, but they're paying interest at 21, 28% interest. But once they max those out, what do you do next? Car loan defaults have doubled in the last 6 to 9 months. So we know that some of these consumers are struggling. On top of that, payments for student loans are coming back online. So think about this consumer. I've maxed out my cards. I'm paying high interest. I can't make my $700 car payment. And by the way, my student debt just came back online. That consumer is going to have some problems. So again, if you have a budget, long-term written goals, you're probably going to focus on those and avoid some of those mistakes, those impulse buys or whatever they might be. Is a Rolex watch a really neat thing? Yeah. Do you need it? No. A Timex for $19.95 is going to work just fine.
Does the same thing. Keeps
time.
Yeah. Yeah. Spoken like a financial planner. But I also think it's great advice. It's funny because Ian is like, he's very, very, very frugal, and his wife is very, very frugal. So they're like exactly what you talk about. They have done a really good job of setting themselves up so that they don't have financial issues, and it's so important to do that when you're young. I heard somebody say you should really work on saving when you're in your 20s, because very few people ever save any money in their 20s.
Yeah, the compounding over that period of time from your 20s to your 60s or 70s, it is stunning. There's all these examples where if you saved $10,000 a year for the first 10 years and never again, versus not saving anything that first 10 years, and then you save $10,000 a year for every year up to 60, the guy who started in his 20s and never saved after his 30s has more money because of the compounding of the interest.
Right.
So early, time is your friend when it comes to investing, and the sooner you start, the better. We have an expression in the office. Prospective client comes in, they have no or low debt, they've been maxing out their 401k plans, they avoided all the frivolous things in life. We refer to them as the people who've already done the heavy lifting.
Okay.
They've done 90% of our job. We just have 10% left. When you walk in, you got the debt, no savings, and tight cash flow. It's tough. I mean, we have to question what value can we add here other than getting to get on a budget.
Oh, okay. Yeah. Yeah, but I bet you add a lot more than value than that.
Well, like I said, it's a lot easier job when someone's done the heavy lifting.
Yeah, done some of the other things right. So one final question: what are some of the key financial metrics that someone should track to assess their success in their real estate business and maybe in their personal finance?
I think keeping track of your incremental tax rate is a very important metric because it helps you answer the question, should I be contributing on a tax-deductible basis or after-tax basis? And that question may be different year to year. So I think doing a year-end tax projection and making that determination, that's an important key. But really over the long term, two things: your debt to asset ratio and the growth of your net worth. If your net worth is growing, you're doing something right. That means you've got appreciating assets, you're saving and investing, you're not spending it all. And people who are spending it all are going to have a really tough time meeting that metric.
One really important piece here, and it kind of goes back to the debt question you just asked. You need to the metric you want is yourself. You don't want to have to keep up with the Joneses and benchmark yourself against someone else. They may be in a different situation, and that's okay. But when you monitor your own net worth, you look at your own debt ratio, that's really how you can win in the long game.
And Rick, investing in yourself, making sure that you're up to date, that you're on top of all the issues, you're going to bring more value to the table. You're going to, quite frankly, be a little more successful if you've done those things.
And reinvesting in the business.
Yeah, we don't think there's any secrets. It's just a lot of hard work, staying up on things, investing in yourself, and just using good common sense.
Yeah, they're never secrets to the people who know them.
No.
So you guys know what to do, and I think that's kind of the point, because you're self-employed, mm-hmm. right?
Well, and for a very long time.
You completely understand a self-employed, and you've been in sales, so your income has been up and down and changes all the time, and it's very difficult to just continually put the same amount of money in especially when you're getting going. As you said, when you get older and you've been doing a long time, that changes things. But I just think people should call you. They should get a hold of you because you're willing to help them out. Just meet with them and help them to get an idea of what they need to do.
And Jacob used the doctor analogy earlier in the day. Not everybody likes what we have to tell them. We simply have to tell them what, in our professional opinion, needs to be done. Just like your doctor. You might walk into your doctor and they give you some really bad news. Rick, you need to hear the bad news so you can make the right
Right.
decision that comes next.
That's right.
Same thing for your personal finances. If you're not getting it right, the sooner you stop and get on the right path, the better off you are. Even if you don't feel comfortable about it, it's going to work for you in the long term.
Yeah. Sticking your head in the sand doesn't work.
Well,
No.
I mean, a lot of what we do is help people not procrastinate and actually take an action, because a lot of what we've talked about, it's overwhelming. And we go back to the first question, how do I buy a stock? Well, if you don't know how to buy a stock, are you doing some of the other things? And so us helping kind of get that plan in place and really hold your hand, for lack of a better term, as you go through these things, that's how things get accomplished.
Yeah, we're kind of your financial accountability partner. You mentioned having a personal trainer earlier. We're your financial trainer. We're going to help you get in good financial shape. It's not always fun. You got to do some work, and you got to stay with it over a period of time if you want to see some results.
You sound just like my personal trainer.
He,
It's
he,
no fun.
he has one himself, so
And she is evil.
So if somebody wants to get a hold of you, they understand that this might be a huge benefit to them, may change their life. What's the best way to get a hold of you guys?
yeah, I think they should just call us, 317-577-8233. If email is more your style, my email is probably the best, jrich, and that's RICH, at Capstone, WA, CAPSTONEWA.com.
And you know, Rick, people who've never worked with a financial planner, we encourage them to have a chance to sit down and see what we do. And for those people who have one, they're not getting good service, and I'm sorry to say that's the case for some people. You just want a second opinion, come in and we'll talk to you. Again, there's no obligation whatsoever. We're never going to try to talk somebody out of walking away from a relationship. Sometimes we've sat down with people who are working with another advisor. We simply tell them, you're getting good advice. You need to follow it. The advice is not the problem. You've not followed it. You just need to stick with this person. They're trying to do the right things for you. And that can be really reassuring and make
Yes.
it easier to follow through.
Yeah, I agree. I had the same thing with the CPA. I thought they were giving me bad advice. I went to another CPA and he goes, no, they're giving you great advice. I didn't like it. Just so you know, I didn't like the advice. But to get a hold of Ian or I, go to hardworkingmortgageguys.com. That's hardworkingmortgageguys.com. Or you can call 317-672-1938. That's 317-672-1938. And you can follow us for more Indy's Real Estate Gurus. And Ron and Jake, thanks so much for joining me. I appreciate it. I think what you've given is phenomenal. I think this will really help a lot of people. We really do appreciate you joining us.
Hey, and Rick, we'd like to say thanks because you didn't make a big deal of this, but you've helped a lot of our clients. And we love the fact we can call you. We know they're going to get good advice. And so we appreciate that, what you guys do, because you're good at it.
I appreciate it. Thanks so much.
Thank you very much.
Thank you, Rick.
Branch NMLS number 33041. Rick Rittman's NMLS number 664589. Ian Arnold's NMLS number is 1995469. Equal housing opportunity. Some restrictions apply.